The Nifty is up about 9 points.
It's added on close to more than 100 points, in fact, on the Nifty.
The mid-cap index is really flitting between red and green. So the mid-cap index is now down around 0.2%.
The market's shown you so much through the day. I mean, most of the volatility played out in the first hour itself. After that, the market remained steady through the day. Now there's some more volatility which is seeping in, especially in the broader market. The 110 points higher on the Nifty. The Bank Nifty up 200 points, so the advanced decline was in favor of the decline.
Well, that was the day so far. Hello and welcome. You're watching us here on Markets Today. I'm Manglam Malu. This is the show where we track about 6 hours of day's trading action in 5 headlines. Let's talk about those headlines itself. After a deep gash that we saw on Friday, there was some recovery after the first hour of volatility. The Wall Street bucks weak global sentiment. Sensex gains over 300 points led by heavyweights. Mid-cap index also ends with marginal gains. Adani Group, which will infuse 20,000 crore rupees into the Ambuja Cements after it took over Ambuja Cements and ACC, has set itself a target of becoming the largest and most efficient cement maker by 2030. Escorts Kubota rallies 8% on positive management commentary. M&M soars after it sells 30% stake in its renewable energy business. Cipla falls over 1% after the US drug regulator made 3 repeat observations on its Goa unit. McLeod Russell hits upper circuit as Carbon Resources tells CNBC TV18 that it has submitted a non-binding letter of interest to the lenders of the debt-hit tea maker. Adani Wilmar gains as it plans to expand its ready-to-cook segment, whereas Bajaj Finance soars as Jefferies bets big on the stock. Let's tell you what we have lined up for you on the show today. It's a packed show. As market opinion, we have the biggest of them all, Ridham Desai of Morgan Stanley, and in Big Corporate Voices, we do have Gautam Adani, the chairman of the Adani Group, talking about the Indian economy. Let's start with the market action itself in today's trading session. It was a 0.5% gain for the frontline indices, 1/3% for the Nifty Bank, and flattish performance for the mid-cap index. Global sentiment was downbeat, but Indian investors actually did well. The reason why global sentiment was downbeat was on account of expected hikes from the US Federal Reserve later this week. Anuj Singhal joins in with the market wrap.
Well, the theme for the Indian market has been outperformance, and that continued today, though in the first 15 minutes it looked like the market was collapsing, but then there was big comeback. There were a lot of stocks which did well. Autos did well, some of the banks, ex of ICICI, consumption did well. The go-to sector once again, though, was cement. What a rally it's been for that space. The broader market, though, was down for second day running in terms of advanced decline. On the index, we had Mahindra, Bajaj Finance, SBI Life, and then some of the heavies like Hindustan Unilever, HDFC, and ITC, which did quite well. On the losing side, ICICI Bank, which has been otherwise a strong stock, was down today. Tata Steel and Tata Motors. In the F&O space, the top 2 gainers were cement stocks, India Cement and Ambuja. Big moves in both these names. Escorts was the other one, which did well. And on the losing side, we had Canfin Homes as a top loser, followed by Delta Corp and GNFC.
All right, and Canfin Homes post-market, there was an announcement coming by with regards to the resignation of the MD, Mr. Kosugi, as well. But let's also get you some market opinion. Atul Suri, CEO of Marathon Trends PMS, says that the Indian markets are staring at a bull run. He added that the positioning of the Indian market is not defensively poised. Instead, it's poised for growth.
Barring if there's no collapse as such in global markets, I think we are in for a fantastic run. I remain very, very bullish in India. I think we will not only just take new highs, we'll stretch it very, very higher. The problem is that if global markets tank really big time due to whatever events, Fed, etc., there's so many moving parts to it. Nobody knows. Then it can get subdued. That's what can burst this move. But otherwise, Indian markets. The breadth, it's just fantastic. In fact, I mean, I think we're in a full-blown bull market, which is not really visible because of so much noise. And that's always positive. When there's so much bad news and still the markets are not going down, that's always good. Banks have underperformed for 2 years, and that's thanks to FI selling and all. You can rationalize it further. But if you look at the market, from the bottom, we are up 14-15%. Bank Nifty is up, a lot more than that. Look at something like PSU banking. It's up 30-35%. But if you look at the bigger picture on a 10-year basis, what have PSU banks done? If you take out SBI from the equation, everything else is a pretty disastrous marketplace out there. So barring your Kotak's and HDFC banks, there's a lot more action happening somewhere else. And that's what I came to the point that what we are seeing in terms of breadth and participation is something we haven't seen. It doesn't point to a market that's defensively poised. It's to a market that is poised for growth.
All right, and it's a market that's poised for growth. So let's get you some more market opinion. Ritam Desai, who's the India equities strategist at Morgan Stanley, said that the Indian market is not behaving badly despite fears of recession in the US. He added that the global bear market has weighed on India despite very strong earnings. Take a look.
US growth cycles. So even though the US is facing possible recession, India is not behaving badly. If you look at the last 30 years, all the US recessions have brought deep bear markets into India. India cannot decouple from the world because we are very big now. We are the 5th or 6th largest market in the world, 5th or 6th largest economy in the world. So we're like a large cap stock in the Nifty. We're not a small cap stock that can do its own jig. Bear market has weighed on us despite the fact that earnings are very strong. We have the strongest earnings in the world, but the markets are actually, they're outperforming but not actually going up. We are in this big profit cycle, and right now corporate profit share in GDP is 4%. It was at 2% in 2019. It peaked at about 7% in the previous cycle, around 09-010. I think it will probably cross that peak. Okay. So probably it's going to go to 8.
All right, so that's a market opinion. Let's talk about the second headline in the space that has been a buzz over the last 10 days or so. Cement stocks continue to be in focus. Ambuja soared over 9% on the back of its fundraising plans. Ultratech Cement too felt the heat as Gautam Adani aims to be the biggest cement player by 2030 in the country. Meanwhile, stocks like Nuvoco, India Cements gains on hope of possible consolidation in the sector. We go across to Nigel with all the details here. Nigel.
Well, the street has clearly read this positively, that the promoter entity, that's the Adani Group, pumping in close to 20,000 crores into Ambuja Cements. That's post the warrant conversion anytime in the next 18 months or so. The promoter entity, currently they hold close to around 63% odd. If all these warrants are converted, then the holding goes to around 70%. The big statement came in from Mr. Gautam Adani. He says that they want to be the most efficient and the largest cement company by 2030. Keep in mind, as of now, Ultratech Cement is a big daddy, and they've already laid out a roadmap where their capacity goes to around 154 million tons by 2025. So Ultratech Cement, a relative underperformer, but on hopes of consolidation, a couple of other names like India Cement, Nuvoco as well, both of them were bid up in trade. Now, brokerages, what are they making of this move? Goldman Sachs, they have a neutral rating with a target price of around 380 rupees per share. But they have thrown out some scenario analysis. And they're saying that assuming this 20,000 crores odd is used for capacity expansion, then there could be an incremental value to the share by nearly around 23 to around 47% odd. That's depending at what level or what valuation is the capacity added on, whether it's at $80 per ton or around $120 per ton. So all those scenarios come up for you on the screen. Investec, they prefer Ambuja in comparison to ACC, and that's why they have a big target price of around 752 rupees per share. They're not so buoyant on ACC. The rationale they give is Ambuja Cements is likely to be used as Adani's key vehicle in this cement foray. In addition to that, they see growth drivers out here, capacities as well they can add out here, and also some synergy, optionality in comparison to ACC. At some point of time, they say maybe there could be a potential merger as well between these two entities. And finally, Jefferies, they have a buy rating on both those two stocks, but big upgrade in the target price on Ambuja Cements to around 620 rupees. They are, they've upped their EBITDA estimates by 20 to around 30% for the next few fiscals. And they say that higher volumes, higher EBITDA per ton will help them achieve this higher EBITDA that they're forecasting. Not just that, they're saying group synergies could flow through from December 2022. Put all this together, cement stocks were in focus today.
India will be a $25 to $30 trillion economy by 2050. While India is the second largest producer of cement in the world, our per capita consumption is just 250 kilo compared to 1600 kilos of China. This is almost 7x headroom for growth. Furthermore, as several of the government's programs gather momentum. The long-term average growth in cement demand is expected to be 1.2 to 1.5 times the GDP. We anticipate growing at twice these numbers. We expect significant margin expansion to become the most profitable cement manufacturer in the country. And we anticipate going from the current 70 million tons capacity to 140 million tons in the next 5 years.
All right, so those were some strong comments coming in from Gautam Adani, and that led the cat amongst the pigeon of the cement stocks in today's trading session. The smaller ones jumping on hopes of consolidation, the bigger ones fearing that there would be more competition. Let's move on to the third headline for the day. Escorts rallied close to another 8%, hit a fresh 52-week high after the company's management said they expected the amalgamated joint venture to be profitable in FY24. The company also came out with its growth blueprint. Sonia Shenoy joins in with the key takeaways from that conversation. Sonia.
If you remember, a couple of days ago, Escorts announced that they will be amalgamating their JVs in order to come out with a simpler, cleaner organizational structure. Everything will now be under one umbrella. Now, we spoke to the management today, and there are many positives that came out from it. Now, these JVs which they are combining are currently loss-making, but they said that these JVs will become profitable by FY24 itself. So, clear timeline was given for profitability. Not just that, they also mentioned how the big trigger for the company here on will be localization of engine production, which they have kicked off, and this will take place over the next 2 years. Now, what this will do is bring down their costs drastically. They are expecting a 20 to 30% fall in costs over the next 2 years, and that's something that the street is factoring in. When asked about the overall business, they said that the months of September and October are expected to be blockbuster in terms of industry demand. And now that Kubota's stake has gone up to now about 53.1% now, Kubota is bringing a lot to the table in terms of better exports, better geographical reach for Escorts, and the Escorts Kubota JV will profit from that, and hence the stock has moved up post the positive commentary from the management, sitting at a fresh 52-week high as we speak.
Take that point, but Sonia, stay with us. M&M was the other stock that also, moved towards a fresh high as it gained over 3% and was also among the top Nifty gainers today.
So, there was some news flow in the morning, right, where the Mahindra Group has decided to now sell 30% of their stake in the renewable energy business, and they will be creating an InvIT eventually, where they will pump in the money into that InvIT and then go and list those assets in the renewable energy business. Now, the management in 2020 had said that they are looking to, unlock value for shareholders in multiple subsidiaries, if monetize assets over there, and this is one of their steps to clean their legacy businesses as well as focus on their core business. So this is of course one reason. But the other thing is CLSA came out with a note this morning where they have a very aggressive target price of 1,567. They have a buy. They say that M&M is now going through a golden period. They have multiple new launches in the SUV space. Their market share has gone up as well. It now stands at 16% in the overall utility vehicle space. In just the last 6 months, because of some big bang launches, the market share has risen from 14 to 16%. And they have very strong bookings of over 240,000 units for new SUVs. And they have multiple new SUVs planned over the next 12 months. In fact, we had a chance to speak to Ramdev Agarwal of Motilal Oswal, and he said that the big positive about M&M is that they're cleaning up all of their legacy businesses. So let's listen into what he had to say.
The company is very in a determined way that they are cleaning up all the portfolios of the legacy businesses and building up on the EV cycle. So it looks very exciting, and the current CEO is completely on top of it. So it's they're not able to produce enough to meet the market demand. This is what the market looks for. 25, 30, 40% growth, at least in next 4-5 quarters. So that's what I think. There is a growth bonanza here, and I think market will remain. I would think at 18-19 P multiple. I think it looks a good stock, good story to pursue for next 2-3 years.
All right, with that we take a short break. Come back. We'll be back with all the other headlines in just a second.